When it comes to the idea of a government shutdown, in your mind, how does that potentially impact sentiment when it comes to investors? And also the fact that we saw so many Republicans push back against that Trump-backed bill. A lot of the rally we saw post-election was the idea that the president-elect would have a lot of support for his policies and things going forward. Do you think this changes the sentiment when it comes to investors?
Yeah, I think you've got it spot on. A shutdown in and of itself is not a huge deal for markets and hasn't been historically. But I think what it signals is Elon Musk's influence and the ability, or the difficulty, I should say, of a very narrow margin in the House to actually pass legislation, especially when there's different factions who want different things. So, yeah, I think this probably will weigh on sentiment. I think what we'll get is a couple of years that look a lot like 2018 with tariff threats and infighting in the Congress. And it could lead to lower sentiment and a choppier market, all else equal.
You know, at the same time, we're seeing the dollar rise, Ross. I was talking to some guests about this, not only yesterday, but we've been covering this here on Worldwide Exchange for quite a bit. When you're looking at the rise of the dollar, do you think that's also putting a lot of pressure on the equity market and the idea that maybe earnings estimates going into next year, they may be too high?
Yeah, I think Donald Trump has said that he would like a weaker dollar to be more competitive, in the global trade market. I think that's going to be really hard to do, especially after what the Fed came out and did the other day, where we're going to have higher interest rates than the rest of the world. We have a stronger economy relative than most of the rest of the world. And our U.S. stocks are, vacuums for global capital. So it's going to be very hard for the dollar to stay in a weakening cycle here and boost multinationals and boost international stocks with that set of characteristics in the market today. So I think it's very hard for me to see a weaker dollar in 2025.
I want to go back to the Fed, that Fed decision, the hawkish cut that we saw. So the hawkish cut was expected, but still it seems like the market's reacting. I was talking to Kramer. He says a lot of people are just badly positioned and some other issues in the market aren't quite priced in. But I want to show you some of the cyclical sectors and the small caps since the election. A lot of those gains, they've really been lost. I'm looking at the small caps. They're actually negative since the election. They're down over 1.5%. I'm looking at industrials down 3% since the election. In your mind, when we're looking at these cyclical sectors, is there one that you're actually still, or are you bullish on any one of them? I mean, we're just seeing a lot of investor confidence in these areas, with the exception of financials, really shift.
Yeah, I think financials and industrials remain good places for capital, shifting higher quality within those sectors. But over the full presidential cycle or the next couple of years, I think those will be good places to be. Industrials have a lot of secular tailwinds. Financials, I think the deregulation and M&A tailwinds will be stronger than this rate headwind. And then the one that I would want to fade is small caps. I think that while the deregulation story is nice, while the pro-small business story is nice, the higher for longer rate environment is such a headwind for small caps versus large caps. And the Fed really reinforced that that's the kind of world we're going to be living in.
All right, Ross, we are almost out of time. Very quickly, core PCE, the estimate's for 2.9%. Last month was 2.8%. Is that concerning when it comes to investor reaction if we do see it come in line and actually see a tick up of inflation after what Jay Powell had to say?
I think it's less concerning for investors explicitly because of what Jay Powell had to say. We got the sell-off in the aftermath of the higher for longer case that they laid out. So if inflation proves sticky around 3%, I think it's just reinforcing what they said and how the market reacted.